Okay. Aloha, people. Great to have you here today. Apologies for the long resumption. Apologies for the waited start. I'm Atomashi, Dania Vestrado, Global Market Analyst. It's another beautiful Friday. It's been a crazy Friday. Very crazy, right? But still quite in line with much of our predictions on Telegram. And if you've been there, I'm sure you would have made some good profits by now. We have Vestrado. We are domiciled with offices and representations all over the world. Malaysia, Dubai, China, Kenya, Nigeria, South Africa, and so on and so forth, Indonesia. We got financial asset classes ranging from stocks to indices, crypto, forex, commodities, and so on and so forth. And we got a very tight spread on our forex, as low as zero point 0.4 to zero point 0.6, ladies and gentlemen. It's great to have you here. Um, Today, what are we doing? We are simply looking at the fixed and dynamic use of the Fibonacci. What does that even mean? For some of us, that perhaps may seem gibberish. It seem like, um, how do I put it? You're starting out in the market, you might not understand what we're trying to talk about today. But if you're a trader and you've been struggling all across board, by now I'm sure you would have known what the Fibonacci is. If you've been trading even for up to a year, you would have known how valuable and what um, significant impact this Fibonacci makes for traders trading the markets. Okay, so what are we going to be doing today? As always, we're going to be looking at the Telegram, what we gave on Telegram, the tips. We're going to be looking at how we capture take profit levels. And we're going to be looking at Fibonacci, how to draw, be it for an intraday, a swing trader, be it for a scalper. Okay, we're going to be looking at how we can apply the Fibonacci effectively to solve the problem of where to draw the Fibonacci. We're not going to waste too much time. It's going to be I'm going to make it quite as brief as possible. So stick with me, okay? And I'm sure we're going to have a blast on this topic. Okay, so going into the action, before I go further, it's important to let you know that we have our social media handles, and the way to join our Telegram is thus at Vestrado Global. Download the Telegram app and insert the words at Vestrado Global. The at being the symbol there on your keyboard, and you can find us very easily and join our Telegram handle. In there, you get advice, outlook, signals on when, how, okay, to exit and enter the market. You don't want to miss that. You also get updates on different um, markets, different events happening, and how to interpret it going into the whatever market, into whatever session you're trading. So kindly be on the lookout for that. All right, let's get into the action. Okay, I see Mr. Negewo Deribe here saying hello. Hello, Mr. Deribe. Let's try to respond to you. Hello, welcome. Great to have you, Deribe. What can I do for you? Would you like to ask a question? You can ask your question, just type it in. I'm here for you, whatever it is. Okay? Whatever it is, I shall try to respond to your questions as much as possible. All right. So let's get into the action. If you have questions pertaining, remember, if you're joining, this is a live recorded session. If you have questions pertaining to something concerning the markets, if you have questions pertaining to something else, or this topic, ask. Please ask. Okay? Don't be shy. I'm here for you. I'll answer anything, however silly you think it is. Okay? All right. So let's get into the action without much ado. Now, um, again, our Vestrado Telegram handle is at Vestrado Global. Just enter that in the space and you can find at Vestrado Global right there on Telegram. That's how to locate us with outlooks and signals and a couple of stuff given across board. come on board. You find us there on different assets, gold, forex, oil. Okay. Sometimes I talk about the S&P 500 indices and stocks. So come in there and you get some good signals and good advice. All right, let's get into the action now. I want us to go into our pain board and, as much as possible, try to talk about today's topic and finish up as quickly as possible. So, without much ado, let's get into the action. Now, first up, what is the Fibonacci? Okay, it's important to know this. There are different types of Fibonacci tools in the market. Okay, there are different types of Fibonacci tools in the market. So let's look at all of them. Let's look at all of them. Okay, we're looking at one, the Fibonacci retracement. Next, the Fibonacci arcs or fans. Okay, there are a couple of them. Fibonacci arcs, Fibonacci, Fibonacci extensions, and the Fibonacci time zones. Okay, this is what you typically find, but the one we're going to be focusing on today is this. We're going to be focusing on the Fibonacci retracement. I'm not going to write on this, but let me just give us a brief history as to what the Fibonacci is. So the Fibonacci sequence is a sort of mathematical sequence that the guy Fibonacci discovered in creation. Discovered that this sequence seems to cut across everything that happens in the world. Okay, good and bad, beautiful and ugly. You find it in trees, you find it in nature, you find it in all sorts. The leaves of trees, the branches of trees, in fact, the human body. Now, the Fibonacci enthusiasts in the market decided to apply this principle to the market and create tools that tend to guide reaction points or inform us as to where there could be possible reaction points in the market. Now, for me, the major one, the most common one is the Fibonacci retracement, where you have several levels. What are those levels? So, say you're starting out a trend. Say this is the beginning of the trend. Fibonacci levels are mapped out into several levels. Okay, so let's start with that. So you have the 0. Next, you have the 23.6. And then you have the 50%. And then you have 61.8. And finally, the 100%. So these are levels that, okay, indicate possible reactions in the market. Meaning, around these levels, we should expect price to either reverse, or if it breaks past it, a significant continuation going up or down, depending on where price is headed. This is a Fibonacci retracement, and we're going to be focusing on that in this lecture. So what has been the bone of contention with the Fibonacci retracement? How do we draw the Fibonacci retracement? The typical way to draw it, according to literature and according to The common way is this. It draws retracement from the beginning of the trend to the end of the trend. This is common literature knowledge. Now, it now poses a problem. The problem is this. What if you have a trend that goes like this? Now, typical literature will tell you that start drawing Fibonacci from, say, the beginning of the trend being this guy right here, and then the end of the trend, let's call it J. Beginning and end. This is where you start from. So if you draw your Fibonacci all the way, okay, this, dear traders, in my experience, according to my understanding and my experience in the market, trading the market, this would be wrong. Wrong in that it's not so. One moment, please. Let's try to get something out here. So wrong in that it's been found to be not so effective. The reactions are not reliable in the sense that when Fibonacci touches these levels, in fact, it's hard to gauge the reaction point using Fibonacci retracement. So for me, this has been a wrong approach, or rather, not so reliable. Not so reliable for me. So what do I do? What do I do? This is how I draw my Fibonacci. I draw it while with an active trend. Okay, so whether you're a scalper or you're looking for a quick entry, you're looking for you're an intraday trader, you're looking for entry exit for the day or for the next 72 hours, or you're a swing trader, I find this approach to be useful. Look, drawing the Fibonacci on an active trend, on a more active trend or ongoing trend is more reliable. I'm going to show that to you. I'm going to show that to you in a bit. So look, imagine you have this. And let's call each wave, give each wave a letter. We're not going to waste too much time. Say we start from here: A, B, C, D, E, F, G, H, I, J, K, L, M, N. Okay. How do I draw the Fibonacci? This is what I do. So if you draw from A to B, first off, I start with um the lowest wave. If you're in an uptrend, in a downtrend, the highest wave, and start looking for places where price has reversed up to 50%. So look, if I draw from A to B, let's project that out. We see that if this is a 50% mark on A to B, halfway mark, you see that price has reversed up to 50% the length of A, forming the wave C. So in my opinion, A to B, null and void. The trend A to B becomes null and void. So what do we do next? Let's first establish that somewhere. A to B null and void. Now, since that has been established, A shifts to D, B shifts to D rather, A shifts to C. So the trend C to D, let's project that out. And let's give it the halfway mark. That's the 50% mark. You see that the trend C to D has reversed more than 50% and has formed the wave E. What happens? C to D becomes null and void. C to D becomes null and void. What happens? C shifts to E. Let's put that here. C to D. Null and void. And then the trend shifts D to F and C to E. What happens? So the trend E to F going up. If this is the 50% mark, you can see that price has reversed not just 50%, up to the whole length of the trend from E to F. What happens? E to F, also null and void. I won't start from E. So I won't start from E. I will not start drawing my trend, my Fibonacci from E. Where will I start from? I shift F to H, E to G. What happens? If we project it out, 50% mark, we see that the trend from G to H has not yet reversed up to 50%. What do? We leave G as it is. Leave G as it is. H shifts to J. So now we're drawing from G to J. Okay? So if we project that out, and here you have the 50% mark, you see that that has not reversed too, up to the 50%. What happens? G still remains constant. Now we draw from G to L. If you project that out, you can ultimately tell by your eyes that it hasn't yet reversed up to 50%. Same thing happens again. G remains constant. And now we draw from G to N. So for me, when drawing the Fibonacci retracement, the valid trend, the active trend to draw the Fibonacci on. For me, I always tell my students, no man is an island. There are different strategies. There are different strategies in the world. Active trend for me equals G to N. Okay, active trend equals drawing from G to N. So what will I do? On my chart, I'm simply going to start drawing my Fibonacci retracements from G to N. This is how I approach Fibonacci. And in doing this, it has solved many problems for me. Let's show you on the charts. So let's first look at, say, the GBP USD, right? This is quite, the 30 minutes chart poses a very beautiful trend right here to use as an example. So let's target. Say the beginning here, we call it A. Active trend. Never forget that. We'll call this guy B. And we'll call this guy C. Let's give it a different color. Maybe red. Or maybe pinkish. And then we'll call this guy D. And this guy comes off with E. And this wave here, if you're not sure of the waves, you can switch to line chart. It can help you. So we'll put this guy here. We can't tag all the waves right now. We're just going to tag the significant waves. Significant ones. And this one right here becomes H. So where do we start from? Now, this is where you find the Fibonacci retracement on Vestrado's platform. The dashed lines here with an F on the bottom right corner. Or you go to Insert, under Fibonacci, you click Retracement. So if we start from A and go to B, you'll see that this trend A to B has sort of reached 50% mark right here. So what do we do? B shifts to D, A shifts to C. If you look carefully, you see that price has not yet touched the 50% mark. For me, that's still an active trend. So I move. C remains constant. I move to F. So you're drawing from the swing low to the swing high in an uptrend. Swing low to the swing high. Let's put that there. From the lowest swing low to the highest swing high in a trend. Let's put that there for you. You're drawing from the lowest swing low to the highest swing high in a trend. Never forget that. So C to F. After F, you're not looking at this guy. You're looking at F. After F, there was no reversal up to the 50% mark. So we move, F remains constant, and we move it to H. So if price happens to reverse, starts reversing, okay, or we're looking at retracement levels where price could reverse to and react, I will draw my Fibonacci from C to F. Meaning if price touches the 23.6% mark, treat it like any other support or resistance. Let's put that right there for you. Treat Fibonacci retracement like any other support or resistance level. It could either touch it and reverse, or it could break it and continue going upwards. If in a downtrend, continue going downwards. So treat Fibonacci retracement like any other support or resistance level. If it touches 23.6% mark, there could be a reversal. If it touches 38.2 right here, follow my mouse cursor, there could be a reversal. If it breaks past it going down, then the next most likely target will be the 50% mark. If it touches the 50% mark, it could touch it and reverse, or it could break it, and if it breaks it significantly going down, then the next most likely target will be the 61.8% mark. If it touches that, there could be a reversal, or it could break it, and if it breaks it going down, then the next most likely target will probably be the 100% mark on the Fibonacci. This is how Fibonacci retracement works. Very, very simple. So let's try to look at another pair right here. Let's try to look at, by the way, Bitcoin has been moving very nicely. Now let's see where the Fibo possibly played a role. Look, if I draw from the beginning of this trend up until here, if you train your eyes and follow the markings, you see that the trend from here up until here, price reversed, touched the 61.8% mark, reacted to it, and then went back up again. You can see that right there. You can see that right there. Let's go again. Let's keep going. Where else did price react to this guy? Where else was the Fibonacci quite effective? In a downtrend, this is how I approach my Fibonacci, and it's worked for me. It's been very effective. Good. We can see this active trend right here. So if we try to zoom in and mark the waves, the major waves, say A, give this guy B, if the waves are not clear, you could switch to line chart. C, and the next guy here, D, and finally E. Oh, let's keep going. The trend is still active. So let's give this guy F. And we'll give this guy right here G, this wave. And finally, H, this wave right here, and then I. Let's stop at J. So how do we draw the Fibonacci retracement? If we go from the beginning A to B, oh, more than 50%. You can see that right there. Touch the 61.8% mark. There you go. You can see that. Touch the 61.8% mark right there. So A shifts, B shifts to D, and A shifts to C. Swing high to swing low. If you follow the numbers, you see it reversed up to 50%. Okay. D shifts to F, and C shifts to E. The swing high there. If you go by that, it really did not touch the 50% mark. Let me show you. It didn't touch it. So I'm moving on. E remains constant. F shifts to H. Right here. Did it touch after H? Yes, it did. So what do? H shifts to J and E shifts to F. I. The most recent one. Was there reversal? Yes, up to after J. No, there wasn't. Let's go again. Yeah, after J, let's start from E and H. Okay, it touched the 50% mark. We shifted to J and then E to I. After J, meaning after this red vertical line, this one, was there reversal up to 50%? No, there wasn't. So typically, I move on like that to this next swing loop, okay, to look for reaction points. And if you see, look carefully, you see that price touched the 23.6% mark here. Look at how effective the Fibonacci is. Reversed a bit, went back up. When it touched the 38.2% mark here again, reversed, and it's still going down. This is USD JPY, 1 hour chart. You see how effective the Fibonacci is. I can't emphasize it well enough. Do we have anything? I think this is what we need to do today on Fibonacci. This is the end. Like I said, we're not going to waste so much time. Today, Friday, there's not really so much opportunities to be had. The markets have been funny with no clear, distinct direction for me, except on the pairs with the US dollar as a base currency. So I'm not going to be giving you any jackpots, any goodies going into the weekend, unfortunately. So we're going to call it quits here today. It was great to have you on board. This is Fibonacci. I hope you learned something. I hope you really, really learned something today. As always, I'm Atomashi, Dania, Vestrado's global market analyst. We are Vestrado. We are domiciled with offices and representations all over the world. Malaysia, Dubai, China, Kenya, South Africa, Nigeria, Singapore, Indonesia, and so on and so forth. Okay, we got spread on Forex from 0.4 to 0.8, very low spread. All right. As I leave you now, I leave you with these few words. There are millions of traders in the world as there are thousands of strategies. Whatever you do, don't be greedy and don't be overconfident. Trade like a machine, trade like a robot. Okay. No one strategy is king. Be open-minded. Always learn. And as a popular prophet once said, be like little children. And finally, remember that the trend is your friend and trade within the trend.